Good morning, folks. How are you? It is a good morning. So I'm wide-eyed and bushy-tailed today. I have a little bit of a busy morning and afternoon, so I'm going to spend a couple minutes with you before your trading day gets started, the opening, and kind of like review short and succinctly the NQ market. And later on today, I'll give you Forex freaks a little bit of commentary on the dollar and the majors on Forex. So it'll probably be part of whatever wrap up I do this afternoon once we close in the regular trading hours session for futures. So, how are you doing today? You doing good? I hope you're doing good. So, I'm looking at the chart here and I'm wondering, as I tweeted earlier this morning, I'm wondering if what are the chances that your chart looks like mine? I'm going out on a limb and I'm gonna speculate here. It's a paper trade, okay? I'm gonna guess that yours looks kind of like mine. And right away, obviously, if you were just looking at the chart like this, imagine when you first started trading and you're looking at the chart, you're thinking, I knew somebody's making money doing this stuff, but how am I going to do it? Like, look at all this stuff. There's got to be some kind of a rhythm or a pattern or some kind of, you know, script. Well, I can't say that because that would imply what an algorithm, right? So we can't use that. So we have to figure out how to determine where the buying and selling pressure is. I mean, that's obviously, the pursuit of everyone that's going to try to be profitable. Um, so we're going to look at that. We're going to look at the buying and selling pressure this morning, and we're going to. I can't, folks. I was trying my best to keep a straight face through that, but I just couldn't do it. But anyway, I don't want to waste too much of your time. I just want to let you know that what we covered yesterday in the live stream in the afternoon. If you haven't watched that one, go ahead and watch that one first. Okay, I promise you nothing in here is going to be all that timely. So I'm going to leave you to your own analysis and skill set during the opening range. So you'll have to follow what you learned in this YouTube channel or use whatever else you use. But I want to review a little bit what we have here in regards to what I said yesterday. So I took your attention to several pools of liquidity, and I'll add those in a moment. Okay, but we talked about this big blow off move here and how it would reach for that low, these lows in here, this low, and these two lows in here. And I warned that on you know, a very low likelihood that it could have went just below that low and left that there. In other words, see how these relative equal lows here, because we came down really, really, really fast. So it could have just went below that, but I was aiming for something like that move below here yesterday. And it, as I mentioned in the review yesterday, it just so happened to be a little bit more aggressive than I thought, and it overshot my timing. So I was thinking in terms of profiling the day in terms of two stages where it would drop down, consolidate, and then drop down. Well, essentially did that. It just prolonged it and it was a deferred delivery. So it had to come back up into this area here, and then it created this sell off. So I'm going to add the annotations real quick. And there you go. There's the lipstick. So all these things should look familiar except for these gradient levels here. Now, for the folks that didn't pay attention, what I stated yesterday was I was expecting it to try to hammer around inside in here for the PM session, then sell off. And I was going to aim for this low, and if best case scenario, try to get something below that. So what I did here is I graded that low and that low. All right. So this little red line here, there's going to be a slight discrepancy between what you see in yesterday's presentation and the charts I posted. If you zoom in real tight there, I didn't have it set on the actual lowest low. So that number on here on that red line is going to be slightly different. It's going to be slightly lower than what I had on there. It's not that big of a deal, okay, but I want you to be aware of that is the only discrepancy you're going to see. So the reason why it is important because I need to make sure that this low and this low is specifically anchored to its lows because it's using two pools of liquidity to grade that range. Okay. So if I want to be looking for PD arrays that's going to explore below this and tackle this sell side liquidity, as I indicated yesterday, that I was looking for a scenario where we consolidated in this range here. Because if it can do that, I can sell short in the premium side of that range. That's divided by this little red dashed line here. That's equilibrium. So anything above here, go short would be a wonderful area to explore shorts to see if we can get below this low one more time and then attack that area as I indicated yesterday. So let's just borrow this little box here. You can see it was utilized there. And we're going to zoom in. Very, very careful because sometimes this thing acts up on me. The zoom. All right. So here we have in Asia last night. Once we got through the Asian session, whatever tomfoolery that was going to be done between 7 o'clock and 10 o'clock, you know, those 3 hours, I wanted to let that kind of like settle because I didn't trust what it was going to do. So I wanted to let them just do whatever tomfoolery they're going to do, and then I'll participate. And what do I mean by that? Well, at 10 o'clock right here, right there, okay, we tried to get above this high here. It failed. It did take out that short-term high here. So we have that going for us. It was a stop hunt. It runs low. I know they don't hunt your stops. Those guys don't go after your stop, Michael. Stop that. You're misinforming the entire community. Such a fraud. So the drop off here, once it got down here, going back through all this run here, the purpose of grading those two pools of liquidity is because if there is an algorithm, I'm just going to speculate and say there could be one. I mean, there could be one. And if it were, well, I want to be looking where said algorithm should use old price data. Now, not just some squiggly little line pattern over here. It's going to have to be at a specific price and time agreeing. So we have the market running out of an algorithmic macro, which is 950 to 1010. It starts its run. So up to this point right there, that's 1010. What are we doing? We're running lower. We want to see it go lower. I indicated that yesterday. And we have a pool of liquidity right there. So it's more likely it's going to at least try to draw down to that. And if I can hold on to that below here, it's breaching the equilibrium between those two pools of liquidity at 30,055 and 3/4 and 29,886 even. So what I'm saying is essentially in simple terms is I'm expecting it now to start to go lower, but I need to look for something to get short on. So pray tell, what should I do? Well, I thought about grabbing the RSI and I thought about putting some Andrews pitchforks on there, and I thought about looking at a couple other things from supply and demand. But I said, you know what? I'm just going to look at something that makes a little bit more sense for me, and I'm going to look at a candlestick that just so happens to lay over top of one of these gradient levels. And here, lo and behold, we have it. This candlestick right here on the upper quadrant. It's a buy side balance, sell side inefficiency. When it just so happens at the time I'm looking for lower prices, it could be utilized as an inversion fair value gap. Well, that would be interesting. That would be interesting if I could finesse, You like that? I'm 53 years old, baby. I'm talking like a teenager. I got millennial tongue. How about that? Don't look at me. My wife just looked at me and grinned. So we're looking at this buy sign about sell sign efficiency that's going to act if we get below it. Inversion fair value gap. What makes this one so good is because it's anchored to a gradient level. Where have we heard that before? Oh, yeah, that three-letter guy. Well, it just so happens once in a while he's correct. So we're going to tap into that logic here. Okay, so Michael looked at this last night and said, "You know what? I'm going to go for it. I think I see what I was looking for yesterday or was waiting for yesterday." But Phil took it upon himself to just rip the entire daily range down all in one fell swoop. Okay, and that's fine. That's fine. But it didn't go to where I wanted to see it go, which was my target, the lower objective, this one. Okay. So, well, that looks pretty, doesn't it? If you look at that right there, see that little caret pops up right in here? That's the execution right inside that inversion fair value gap. That is anchored to the buy side of the curve over here. And the candlestick has to be laying on a gradient level. That's what validates your smart money concept. Good old ICT, that guy. That's how you validate. That's how you selectively choose what PDA array you like to tap into. It has to be based on this because if there is an algorithm, it has to have a way of framing logic around what candlestick, what time interval, what price level is it going to refer to. There's a myriad of all kinds of excuses retail can say why price did this and that. But if there's an algorithm, it's going to be very specific. And that's why it never agrees with all the retail concepts, but it always agrees with good old ICT guy stuff. Ain't that funny? So there's the short entry. And I wanted to see speed and distance and velocity once we get through the halfway point or consequent encroachment between these two pools of liquidity 30,055.75 and 29,886 even. That's that point right here. Look what we get. There's your signal. It's going for what I was aiming for yesterday. So just sit tight and let it cook. Well, just so happens it gets down there. Look at that. Right there, one tick below that. Boom. Nice, isn't it? Now, I understand that sometimes I get folks that come into my comment section or sometimes they'll tweet to me and they think they're sharp. They think they're funny. They think they're onto something, right? I want you to think about what you're looking at right here. You see it? Now, I already know what some of you are thinking. He zoomed in real tight. He did that to hide something because he's a fraud. This guy is a fraud. Just because he doesn't want to call himself the three-letter name anymore. Okay, we're just going to call Michael the fraud. Okay. You see where I'm going with this? If you don't know where I'm going with it, trust me, the punchline's coming. But I want you to think about how nice that price run was from here all the way down to there. And then I want you to think about young men. There's three of you in the last 2 months. You never see any other old executions. You never see that. I wonder why. I wonder why you never see the other executions. It's like he's resetting all the time. That's interesting. What do you see there? Oops, 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 and oops. It's almost like these videos teach exactly how these markets are going to book. It's crazy. I know. It's unfortunate that some people get tied up with the personality and they don't take advantage of the insight because I'm trying to help all of you. And if you don't want to use my help, that's okay. That's okay. But you can't say Michael can't trade. Now, ICT, he may not be able to trade. Okay. Because it's commonly understood that ICT stands for I can't trade. But Michael sure as hell can. He sure as hell can. And I want you to think about how what we were tying in yesterday's discussions and what I'm showing you here, I'm bringing that technical science right to task and showing you how to navigate these markets using time and price, grading specific ranges, and then utilizing that for completion of a price run that had yet to deliver, that being the 29,818. Been away, been away, folks. What are you talking about? Scroll back, scroll back. There ain't nothing else there. What are you talking about? That's the business we're looking at. And you get this out of your way. No market replay, none of that business. Okay, there you go. All right. Now, when it comes to, say, ES, real quick, we'll take a quick peek at that. Well, that's actually nicer. That's actually really nice. See, when price creates this, and I got to be very careful because I know the market's getting ready to open up, and I want you to have a couple minutes before I don't want to distract you. But see how nice this is? We have these imbalances, imbalance, 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 and then we have these small little retracements in here, and they may or may not use the inefficiency and then start running again. That's the kind of price action I like to see. I like to see those types of things. I don't like to see where price does a lot of this stuff in here, where it's sharing a lot of candlesticks. I'm sorry, when one candlestick inefficiency is spending a whole lot of time. Look how many candles it stays in there. That's not an environment you want to be a part of, even with these relative equal highs here. You don't want to look at a market like that and say, oh, I'm excited and interested in doing something with that. You don't want to do that. But when you start seeing prices show a willingness to escape and really run and leave little inefficiencies, that that right there, that's low resistance liquidity run conditions. And hopefully, with the time spent with me, you'll learn to identify that in price action. And if you get into a trade and it starts to exhibit those characteristics, maybe you want to dial back the risk. Maybe you want to not add to your winning position. Maybe you want to take profits earlier because it could shift into a market that's more unwilling, unwilling to participate. Okay. So that was a short little review. Hopefully, it wasn't too painful for you. I hope you had a little fun and you learned something in addition to using pools of liquidity and grading that range between there because it's the same thing that we do with everything else. You have to have a premise. You have to know where the market's going to go. And if you can have that, if you know where it's going to go, everything comes together if you just relax and let the price and time line up. If those things occur, chances are you probably got a tiger by the tail. I wish you good luck and good trading today. Be safe, and I'll catch up with you this afternoon.